Ladies and gentlemen, good day and welcome to the Varun Beverages earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from SEBI India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Varun Beverages Q2 and H1 CY 2022 earnings conference call. We have with us Mr. Ravi Jaipuria, Chairman of the company, Mr. Varun Jaipuria, Executive Vice Chairman and Whole-time Director, Mr. Raj Gandhi, Group CFO and Whole-time Director, and Mr. Kapil Agarwal, Whole-time Director of the company. We will initiate the call with opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now request Mr. Ravi Jaipuria to make his opening remarks.
Good afternoon, everyone, and thank you for joining us on our earnings conference call. I hope all of you had the opportunity to go through our results presentation that provides details of our operational and financial performance for the second quarter and half year ended 30th June 2022. We are pleased to share that we've delivered a record performance during the quarter. Our continuous effort to invest in our business despite the pandemic-led disruption of peak season during the last 2 years and return of normalcy in day-to-day activities translated to robust demand, leading to consolidated sales volume growth of 96.9% year-on-year. In addition, we were able to improve our realization per case by taking price hikes in selected SKUs, reducing discounts, incentives, and improving the mix, leading to doubling of our top line during the quarter as compared to last year. On the profitability front, despite the inflationary raw material environment, we witnessed limited impact on our gross margins during the quarter because of our early stocking of key raw materials, an improvement in realization. Further, operating leverage due to high volume growth translated into improved EBITDA margins of 25.2%. Healthy cash flows during the period enabled us to significantly reduce our debt, thereby strengthening our balance sheet position. I'm happy to share that in addition of our operational excellence, end-to-end execution capabilities, governance practice, and strong track record, VBL was recently awarded from PepsiCo as the best bottler in Africa, Middle East, and South Asia, AMESA region for the year 2021. I'm also pleased to share that in line with our dividend policy, the board of directors has recommended an interim dividend of 2.5 per share. With substantiality being a core principle of our business model, we continue to undertake efforts towards PET recycling and improving energy and water efficiencies with the goal of having a net positive impact on the planet. On the demand front, we are seeing encouraging consumption trends across markets. Directionally, we continue to implement strategic initiatives to solidify our market position as a key player in the global beverage industry and are confident of continuing our journey of sustainable value creation for all stakeholders. I would now invite Mr. Gandhi to provide the highlights of the operational and financial performance. Thank you very much.
Thank you, Mr. Chairman. Good afternoon and a warm welcome To everyone joining us today, let me provide an overview of the financial performance for the second quarter and half year ended 30th June 2022. Revenue from operations adjusted for excise GST grew by 102.3% year-on-year in quarter 2 2022 to the level of 49,548 million. Consolidated sales volume registered a solid growth of 96.9% to 300 million cases as compared to 152 million cases in the corresponding Q2 of 2021. On account of strong demand during the peak season, driven by return to normal day-to-day operations and our continuous investment in expanding the distribution network and capacity. Realization per case improved by 2.7% to the level of rupees 165 in Q2 2022, led by price hike in select SKUs, reduction in discounts or incentives, and improvement in mix. CSD contributed to 73%, juices 9%, packaged drinking water 18% of the total sales volume in Q2 2022. On the profitability front, gross margins for Q2 2022 reduced by 302 basis points to the level of 50.5% from 53.5% in Q2 of 2021, primarily because of the increase in cream PET chips prices by 30% over Q2 of 2021. The increase in input costs was more than offset by operating leverage, leading to improvement in EBITDA margin to the level of 25.2% during the Q2 2022 from the level of 23.3% in Q2 of 21. EBITDA increased by 119.1% to 12,506 million in Q2 of 2022 from 5,702 million of Q2 of 21. Depreciation increased by 18.9% to the level of 1,531 million as compared to 1,288 million in Q2 of 2021. This is because of capitalization of assets in Q1 2022. PAT increased by 151.6% to the level of 8,020 million in Q2 22 from 3,188 in the corresponding period last year. This is driven by high revenue from operational improvement in margins and transition towards lower tax rate in India. This is under the new regime to which company has transitioned in this quarter. Our net debt stood at the level of 20,555 million as on June 30, 2022, as against 30,053 million as on December 31, 2021. Debt equity to the level of 0.4 and debt EBITDA up to 0.8 as on 30th June was there based upon the trailing 12 months EBITDA. H1 2022 net capex was 6,700 million, primarily for setting up of the new greenfield production facilities in Bihar and Jammu and brownfield expansion in Sandila factory. On the working capital front, working capital days reduced to 17 days as of 30th June 22 compared to 24 days as on 30th June 21 as the business returned back to normalcy and most of the new material inventory stock for the new season has been utilized. Overall, the company's financial position continues to be solid and we look forward to delivering healthy growth
let's say, either at India level or at an overall level, assuming no further acquisitions?
I think realistically, I can't really tell you exact numbers, but we've always said double-digit growth really looks quite inevitable, but hopefully how high
double-digit volume growth, right?
Pardon me?
Yes, that's right.
Double-digit volume growth, right?
Minimum we are expecting, and so how much it can be, we don't know. But the market is looking good, and our products are being very well accepted. Our energy drink has surpassed all our expectations. Our dairy is doing extremely well, and our juices are doing extremely well. So all our products have been well accepted and doing extremely well.
Sure. And just to clarify, double-digit growth implies double-digit volume growth, right? Volume is what you're referring to.
Yeah.
Okay. My last question, your press release talks about, 90% capacity utilization. You spoke about Bihar. So can you just, highlight the plans on the capex side, calendar 23 and 24 if possible? What you are thinking on the capex side and capacity expansion?
Well, we are already in the process of setting up 2 large greenfield plants, one in Madhya Pradesh and one in Rajasthan. And we are adding a few more lines in that, like I said, we are expanding Bihar and few more territories which are brownfield plants, where our capex will be much lower. So hopefully next year we are looking to add about 30% more capacity.
Right. And Mr. Gandhi, can you just quantify in terms of, rupees million that you are going to spend this year and next year?
Well, exact amounts are not completely here right now, but we are looking at approximately about 1,200 crores.
Perfect. Thank you and wishing you all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Nihal Maheshwari from Edelweiss. Please go ahead.
Yes, thank you so much and congratulations on the strong performance. So 3 questions from my side. The first one was, would it be possible to give a breakup of the volumes that you generally do between India and the international territories? And in that also, if you could bifurcate it for the south and west part of it.
India is what one?
India
is about 410 million.
This is H1.
This is H1. You want quarter or you want the...
If you could give it for the second quarter.
Second quarter is 262? Second quarter is 262.
That is very helpful, Mr. Jayapura.
And 133...
37.7 Q2 of international, 37.7.
37.7 is international and 262 is India.
Sure. And approximately what of this 262 would be south and west?
We don't have that breakup right now, but the growth has been practically identical south as well as west.
Understood. The second question, Mr. Jayapura, was that, how do you look at your market share even after such a strong season? Because somewhere, statements keep coming up, but just wanted a sense from you that how do you think your share has performed? Because you highlighted some of the underperforming territories in the eastern region, along with the ramp up that south and west have seen. So versus say 3 years back or even 2 years back, has the share of Pepsi overall increased in all categories or anything specific you want to highlight?
Well, it's very difficult for me to say, but I think it's the market which has to judge. Everything is open. Coke has just partly disclosed their numbers, and we are giving you our numbers. So I think for me to say we have gained share or lost share, I would not like to comment.
We can only say in the last quarter, VBL India has grown 106% in volume terms. That's it.
Understood. My last question was, after such a robust quarter, where I'm assuming that we've seen some benefit of the strong summer season. So historically, post such a season, is it possible, or are we still targeting a double-digit volume growth, or maybe assuming that there is some element of the strong summer season that could be enough as we look at next year? Just trying to think aloud on that.
No, we are definitely looking at double-digit growth. So there's nothing which has after the summer. Obviously, little bit in the rainy season, it depends where it rains little bit more or less. But fundamentally, overall, I mean, if one territory might perform a little less or one better because of the rains, we are still looking at double-digit growth.
Nihal, here, this confidence is coming from the fact that we have seen in this season what were the constraints we found on the supply chain or on the preforms or on delivery or on the production, etc. So this is what we could achieve with our constraints. So, all this capex which is happening and the corrections are happening for the next year is to, encash to its full capacity what we have missed out during the year. So I think that if other things being equal, that should be a possibility.
Understood. Just one last thing. If you could give the contribution of Sting this quarter, and I would be back.
Yes. Sting, we have grown 185%, and that's mix is about 7.2% of the total volume.
Perfect. That's very helpful. I wish you all the best. Thank you so much.
Thank you. The next question is from the line of Chirag from CLSA. Please go ahead.
Yeah, thank you so much for taking my questions, and congratulations to the Varun team for such an excellent numbers. Mr. Jaipur, you mentioned that the dairy portfolio is also doing quite well. Can you just give us a sense around how this...
I couldn't hear you properly. Sorry.
Am I audible now?
Yeah, please.
Yeah. Mr. Jaipur, you mentioned that the dairy portfolio is also now doing quite well. Can you just give us a sense of how many states have we launched this product and how much distribution touch points have we covered so far?
Well, we have not been able to go very far because of our capacity. Because dairy we can only produce in one of our plants, which is in the north in Punjab. So we have restricted most of our products to the north region only, and whenever we had some extra capacity, we have sold to other provinces. But fundamentally, we restricted it to north. So hopefully, by year 2 for the season 2024, we will be able to supply most of the other territories after we have got the plant going.
I understand. So, can we assume by the end of 2024 we'll have a pan-India rollout of dairy?
Yes, Chirag, by the end of 24 or in the beginning of the 24, we will doubling the capacity. That's right.
I understand. And Mr. Gandhi, can you just elaborate a little bit around write-off that we have done? We have taken 2 consecutive write-offs on the returnable glass bottles. I understand that demand trends are moving from RGB to PET. Is there any further write-off that is required now going forward on the RGB side?
Chirag, if there would have been any further, we would have done right away. See, this is something which is a real-time exercise, and you will recollect even in the last quarter we had when the
challenges with it, and if things go well, we should. That's why we are quite confident that double-digit growth look very feasible going forward for the next few years.
Okay. So still there is a. Can you suggest whether there is a more scope in South and West territories, in North also, North and Northeast, so still there is a decent scope?
Well, there is scope in every territory. North, South and West, obviously there is more scope, and even in East, which we acquired,
right,
there is enough scope. So North was the only original territory we had, where the growth will be the regular growth, but the rest of the territories we expect better growth.
Sir, thank you very much, and congrats for once again for the superb execution.
Thank you.
Thank you. The next question is from the line of Jaykumar Doshi from Kotak. Please go ahead.
Yeah, hi, good afternoon. Congratulations on very solid results. I've got 2 or 3 questions. The first one is I'd like to understand distribution number that you shared a little bit better. So just so that I've understood it correctly, 3 million outlets as per AC Nielsen, which includes about 250,000 overseas retail outlets, 400,000 exclusive Sting outlets, and the balance would be India outlets where you are able to sell the entire portfolio. Is that understanding correct?
Yes.
The 400,000 is also India outlets, but
correct.
Right now they have started with Sting. And
Understood.
As every month passes by, they will start carrying our other products also.
Correct. But that 3 million includes 1,000 international, right?
That's right.
Now, how does this compare versus Coca-Cola in India as per the same AC Nielsen data? Your overall India outlets today.
So we are still less than them. That's why our share is much lower than them. And a lot of our territories are much weaker, which I said, where we are holding 15-20% market share. So there is a lot of scope. And the only thing I can tell you, there is enough headroom and enough opportunity for us to grow.
Possible to give us an idea what is the magnitude of opportunity if you were?
I would not like to comment on that.
Sure. Second is, sir, you had indicated that you had, at the time of acquisition for South and West, you had indicated that you would, the target at that point of time was to double distribution in 3 years. Now we have lost 2 years. So, how much of this distribution expansion has come from South and West? If you can give us some color, that 2 million to 3 million.
Because 3 years have passed, but 2 years were complete disaster for us because both the years COVID happened in the peak season of April and May. So the real expansion has happened only this year. And you cannot double your distribution in 1 year. So we are on the right process. Things are happening in the right way, and that's why you're seeing such healthy growth. And that's why I'm also saying that going forward, it looks very positive, and we feel that double-digit growths are very doable.
Understood.
And so hopefully we can do better, but I don't know. But those are the numbers which look very feasible.
Correct. So do you see a scenario where South and West will accelerate from here on, while the growth over the past maybe couple of years would have been similar to North and East?
South, West, and East, all three.
Even
because North was the only original territory we really had. So even in East, a lot of territories came later on, which was Bihar, Jharkhand, Odisha. All these territories came later on. So as we have mentioned, as when we have put up a plant in Bihar, the growth have been just out of proportion, and we have already run out of capacity. So, I really don't know how large can it be large, because we had planned this capacity for 3 years, and we have run out on the first year. So I don't know. Some of these territories are so under-penetrated that it's very difficult to really answer.
Perfect. Finally, on Sting, is there an opportunity for Sting in overseas market, or are you already sort of, selling Sting in?
We are already selling Sting in overseas market.
Oh, understood.
We have just launched in Nepal, and other countries we were already selling.
Okay. And finally, the 1,200 crore capex number that you indicated for this year and next year in terms of the expansions that you have sort of planned, is it only growth capex, or does it include maintenance capex will be over and above this, right?
Maintenance we write off. We don't in the P&L. We don't take it to in CapEx.
Right.
So we write off on our P&L.
But from a cash flow perspective, what will be the total outgo this year and next year, including 670 crore that you've done in the first half of this year?
So this year is 670 crores, and next year when the plants by March, which is when we capitalize because all the lines start, the expansion happens. So the cash flow keeps going from as we purchase the land, the buildings are happening. Part of it is this year and part of it is going to be next year.
Understood. Thank you so much.
40% would be this year and 60% next year.
Understood. Thank you so much.
Thank you.
That's it from me.
Thank you. The next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Our organic volumes, if we see before COVID, over CY 18-19, sort of saw organic volume growth of about 13%. And now also post-COVID, after unlocking, if we see on a 3-year CAGR basis, it's about 15%. So I wanted, if you can, still you have provided that you can see double-digit volume growth going ahead, and that's quite encouraging. But if you can sort of narrow it down into in terms of low teens, mid-teens, high teens, then it would be really helpful for us to sort of understand the scope better.
That is not possible, I mean, when I'm telling you, I wish I could predict that specifically, but double digit itself is a good enough number, and that is what realistic we look at. It could be 12, it could be 18, I'm not very sure. Depends partly on the season and depends on our execution. We believe we are executing well, and depends on our competition also how they execute. So.
Sure, sir. And secondly, wanted to understand within categories, juices have seen relatively faster growth this quarter versus carbonates and water. If we see on a 3-year CAGR basis, so wanted to check currently. Versus carbonates, what would be the extent of distribution for juices?
The distribution or the volume we are asking?
So I'm asking, so if there are 3 million, 3 million retail outlets, in how many outlets we are distributing juices?
I would say about 60 to 70% of the outlets.
Okay.
But exact numbers we don't have, to be honest.
And all the rest, 30% or 40%, we can service or distribute juices to those outlets as well, or there are certain limitations where...
Some of the outlets don't take juices. All the outlets don't take juices. So as we have said, 400,000 outlets out of this, which is about 18-20%, have only started with our energy drink. So ultimately, as I said to you, they will start carrying our other products also. But it takes time to enter a new market, a new outlet. Sometimes you have to accept what he wants, and then slowly, once you have a relationship, you start penetrating with the other products.
Sure, sir. And last question is to understand the margin profile. So currently in this year, despite significant raw material
No, I think fundamentally you're pretty close to it. See, what happens is partly because our lowest value product, which is glass, has stopped selling and reduced. So our high value products have started selling more. So that's why you're seeing a change in the value of the products. Also, as I said, our energy drink is doing better. Our dairies are doing better, which are little high priced, and our Tropicana juices are doing better, which are slightly higher the value. So both ways, as we said, double digits, volume, and plus, of course, some value will keep on. This is what we anticipate growth to be coming for the next few years.
So of this 15% difference between volume and value on 3-year basis, would you be able to split up that 15% between pure pricing and mix?
No, it's very difficult at the moment. If you have some query, then offline maybe they have to get into the exact numbers and give you.
Sure. Secondly, when you earlier said that we would be able to do a double-digit volume growth, stable state going ahead, is that, I mean, I need to understand how much of this would you attribute to the industry growth itself, and how much is sort of your confidence of growing faster than industry? So if let's say you have a 10, 11...
Faster than, I have never said I'm growing faster. So I believe that we are doing a good job, and the rest I leave it to the market to judge. But the industry is growing very healthily, and I think we are doing a good job.
So basically, over the next 3-4 years, you believe that the industry itself can do a double-digit volume growth?
Should.
Okay. Understood. And lastly, I know you have said this, but I just wanted to again ask, because it was not clear to me. What was the capex planned in CY22 and 23? And here I am talking about, I understand the CWIP moving into gross block when it is commenced, etc. I am looking at it from the point of view of in which it moves into gross block. So let's ignore the CWIP, let's ignore the cash flow impact of the capex, but let's look at when the capex come into the balance sheet. On that basis, what's the capex in CY22 and in CY23, please?
22, it is 670 crore, which is given in the presentation, and for next year, Chairman has stated 1,200 crore.
Approximately 1,200 crores.
1,200 crores. And with this capex 670 plus 1,200, what percentage would it result in expansion in the capacity?
Well, I had already said about 30%.
30%.
670 is already captured in this year, which we have already, used that capacity. 1,200 crore will be adding about 30% of capacity.
And this 1,200 is all in India?
This is mostly in India, yes.
Okay, sir. That's all from me. Thank you.
Thank you.
Thank you. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, in case of distribution, getting more color on it, can you indicate what is our current share of e-commerce, modern trade, B2B channels like Horeca, and then the general consumer market? And also, what is the revenue share of in-home consumption versus out-of-home consumption? So maybe 500 ml SKU and below, and 500 ml SKU and above share for us.
So our mix is approximately on trade about 23% and off trade about 77%. And this includes Horeca modern trade as well. So the 23% includes that.
Can you please repeat?
23% is. Okay, so Horeca and modern trade is about 4%. and of home consumption is 23 and off-trade is 77.
Okay, understood. Sir, lastly, on the Sting, can you indicate the current market size, the total market potential for this brand? And
very difficult to say because there are very few players in the energy. Coke has just entered the energy segment, so worldwide energy segment is doing extremely well, and we believe it should do extremely well here also. But if we see a lot of countries, it has reached about 12 to 15% of the mix, and even larger. So,
okay. So in India, it is currently 7%. So
no, India is not 7%. 7% is our mix. It's not 7% because Coke was not in the energy drink.
Okay. So the overall mix in the overall
right now is very low. Energy drink is very low. I mean, Red Bull and all are very niche products. They are expensive niche products. So there is huge opportunity to grow this product.
Okay, sure, sir. Understood. Last question. So the 3 million distribution outlet that we are looking at, where do you see this number by end of CY23? Yeah, that's it. Thanks.
Well, we normally look at about 8 to 10% expansion in our footprint. So that is what we expect. If we can do better, it'll be great, but that is what we expect.
Okay, sure, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Chetan Ginodia from Alpha Accurate. Please go ahead.
Hello, sir. Congratulations for a great set of numbers. Sir, is it possible for you to give some color on region-wise international geographies? And secondly, I wanted to understand, so last year, if I see for CY21, the profitability in Nepal region, Sri Lanka region, and Morocco region was slightly lower compared to the company level PBT margins. So what could be the reasons for this, and what are the steps that we are undertaking?
Internationally, every year something or other. Now, Sri Lanka this year the profitability. I mean, the Sri Lanka itself is shaky. So things keep happening, but that's why we consolidate international and give you one. But all our markets are doing well. Sri Lanka has its challenges, but it's such a small portion of our overall business that it really doesn't affect. It's about 1%, so it doesn't really affect us to that level. But that also we believe, even though we are growing there, we believe it will come back, and it might take a little longer.
Okay. In Nepal and Morocco region, any updates?
Morocco and Nepal are both doing well for us, and they are both growing, and we are quite happy. And the profit margins are also increasing, so they are in line with what our business is.
Okay. And just lastly, wanted to understand what is the industry volume growth, long-term volume growth for our carbonated drinks category over last decade or so, and do you think this is going to change going ahead, or do you think the increased penetration impacts this number?
Well, it's basically because of increased penetration you are getting double-digit growth. Otherwise, why would you get the growth? Because we are penetrating, where we are seeing 8 to 10% new outlets are being added, and the markets have opened up. So go-to market as well as home consumption, both are growing. Even HoReCa channel is growing. If you see, fast food is growing as fast. So everywhere consumption is growing.
Okay. Thank you so much, sir, and wish you all.
Thank you. Thank you.
Thank you. The next question is from the line of Suman Kumar from Motilal Oswal. Please go ahead.
Yeah, hi, sir. So when we talk about the under-penetrated market like Bihar, UP, and West Bengal, Jharkhand, so can you discuss about how the penetration in these markets compared to the developed market like West and some market in South?
So see, each state, I mean, if I start describing, it will take too long. But as we said, most of the territories we acquired, a lot of them were very under-penetrated, where we had 15-20% share. So there, all we need to do is keep on increasing our distribution. And as we said, Bihar was one state where we did not have a plant. And after putting a plant, we have had real healthy growth. And we have run out of capacity in the first year. So these under-penetrated markets, as we are putting more go-to-market vehicles, busy coolers, they are all growing at a faster pace than our regular markets. And there is still so much scope, because when you are at 15-20 market share, then the gap is so large that hopefully in next few years we don't see any challenges, except putting in enough vehicles and busy coolers and go to market.
So when we talk about the under-penetrated, that is, you are talking about your distribution channel, number one. Number two, this also includes the changing consumer behavior, consumer drinking pattern also?
Well, it does, because if your product is not available in a lot of outlets, I mean, under-penetration is basically your availability in outlets is much lower, and that's why we have to keep expanding our number of outlets and keep on increasing our distribution. As we keep doing that, the basic products are approved, the local people like the product. It's just that it's not available. So as we are making it available, the volumes are growing.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Sanjay Chatpati from Ampersand. Please go ahead.
Yeah. Hi, sir. Thanks a lot, and congratulations for a fantastic set of numbers. Can you please clarify your distribution outlet expansion growth plan? I heard that you are annually targeting 8 to 10%. Just want to reconfirm that.
That's right. You've got it right. That's what we are saying.
Okay. And the second question that I just wanted to understand is that this capex plan, which you have said will take up your capacity by 30%, so that will be ready by onset of next summer season. Is that right, sir?
That's what we are planning.
Okay. And last thing that I just wanted to check, that your margin, which you said that you have protected by buying these preforms in advance, but probably you have run out of those stock now. So how will the cost structure shape up from here in the near term? And secondly, as people have been trying to probe that now that South and Western market is kind of completing their turnaround, and
So our margins are what we have shown would be approximately that, unless until the oil prices come down, then the resin prices come down, then our margins could improve. But we have got very healthy margins, and we have never said better margins than this. So we should be able to maintain our margins. We don't see a challenge.
Okay. And despite running out of those preform stocks?
Yeah. So it's ongoing. You keep buying and you keep selling, so you keep adjusting that.
Understood. And if I can just check with you that the kind of operating leverage which we saw in this quarter, was it something was affected somewhat because you ran out of capacity?
No, as it is, we have grown 106%. Rest of the things, are fine to be as a guide for building capacity for the next year. Otherwise, rather we have taken advantage of operating efficiency by, in spite of direct cost going up, improving the EBITDA margins. So we have availed that advantage to the fullest.
If I can check one more thing, that what I feel is that the beverage market has been growing so fast that the advertisement and brand visibility spent by the respective brands has probably come off. That at least appears from the minutes of advertisement that we see on media channels. Is that something which is
no,
the demand is taking for granted?
The budgets are going up only; they are not coming down. So advertising levels don't come down.
Okay. And also in terms of product innovation from your side, are there more products on the anvil and are likely to keep the excitement going?
Absolutely. Although every year, first we need to consolidate what we have added, and then there is always categories in our portfolio. Whenever we need, we can take out and start adding it.
And the reason why you have chosen this greenfield capacity in these two states is because of again under penetration in those region, or
not under penetration, because our demand to supply our capacity is much lower. It has become lower than what our requirement is for these two states.
Yeah, because if you can repeat a Bihar-like experience here, and these are two much bigger states in terms of.
No, but Rajasthan we already have 2 plants, so this is because we are our sales are higher than our capacity has come to exhaustion. That's why we are adding more capacity. And similarly in Madhya Pradesh we already have a plant.
Okay.
But we are putting on the border of near Chhattisgarh, so where we don't have a plant. So Madhya Pradesh and Chhattisgarh will be catered from this.
Got it. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Akash Patter, an individual investor. Please go ahead.
Hello.
Yes.
Sir, I have one small query about the company is doing fantastic. As per we seen result today also, and following the other quarter also. But I have one small. Can you just highlight on what is the debt plan of a company that after some 5 years or 7 years can we seen VBL can be a debt-free company, or it can be manageable?
It can be debt-free if we don't expand even 1 year.
No. I'm saying that after some 5 years or 7 years, after can we see a VBL or net debt-free company?
The question is, do we want to be exactly debt-free? Our debt is so low that we will keep on getting some opportunities or the other, and we'll keep expanding. But if we really want to be debt-free, we can do it any year.
Okay. Okay, sir. Thank you, sir.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Gautam Jain from GCG Finance. Please go ahead.
Good afternoon, sir. Congratulations for a very great set of numbers. You have exceeded all the expectation of all the people, I think so.
Thank you.
My question pertains to, is there any deliberation regarding any new product to be added from Pepsi side, and or any new geography still to be added?
Well, India, there's nothing very much left, and we are always open to Pepsi. If they give us any territory which is good, we are always looking to expand and what we can handle. So limited expansion we'll keep doing in geographies whichever Pepsi keeps offering us.
Okay, and in terms of new products?
New products, there is always Pepsi always has a slew of products which are available. Question is, once we launch couple of products, then we need to make sure that they are properly serviced. Just by adding new products, it doesn't help. So once we feel that we have reached a scale with those products, then we keep on adding more products. So there's no shortage of new products.
And can you just highlight few points on the recent tie-up with Pepsi regarding Kurkure?
That we are going to start manufacturing, I think, by end of October or November. And once we start that, then hopefully in the coming years we'll expand with that.
And the license would be same like other products?
No, we are producing for PepsiCo. PepsiCo is doing the marketing. We are going to manufacture and give it to PepsiCo.
Okay, but in future that scope is also there. I mean, we can get that distribution also, right?
I wish I could decide for Pepsi. I would.
No.
Always opportunities there, and we can keep trying.
Thank you so much. Wonderful result.
Thank you.
Congratulations.
Thank you.
Thank you. Before we take the next question, reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Arushi Lonia from Hem Securities. Please go ahead.
In the last con call, you had mentioned that in Zimbabwe you are adding capacity by end of May or early June. So could you please give us some light on the development?
So we have added one line in Zimbabwe, and the line has started producing, so it will give us results for this season, because their season starts end of August, and we will have enough capacity to feed that market.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Assuming that you are very close to full capacity utilization, your current asset turnover on a gross block basis is about 1 time. I'm adjusting the gross block for whatever Ind AS adjustments happened, and on that basis it is approximately 1 or 1.1 times. Now, with the sale of 8,800 crore expected approximately in CY22, if I add 30% to that, which is your capacity enhancement, it can generate 2,600 crore of sale with a 1,200 crore of capex. So the incremental asset turnover on this capex would be more than 2 times versus your overall India sales by gross block of about 1.1 time. So can you explain why the asset turnover for the incremental capex is going to be higher?
See, whenever you are adding brownfield capex, it will always be less, because your cost of land, the development around it, there is no cost. Its only cost is of the line. Your cost is higher when you are doing a greenfield plant.
But of this 1,200 crore, a large part is greenfield, right?
No, about 60% is greenfield, 60 to 65%, 35% is. So whereas in that 35% gives you practically the same capacity.
Okay, I see. But this calculation is correct, right? That for the 1,200 crore of capex you put in, and once it is fully utilized, then you will be able to generate 2,600 crore of sales from that.
You have to look at overall the companies because it depends where you are putting the line, what's the seasonality of that territory. If it is put in south or west, the turnover per line is much higher because the seasonality curve is much lower. So there are a lot of permutation combinations, but overall you have to look at the overall company's total turnover, and based on that your capex.
Sure. So I'm not asking what would be the turnover generated from those plants. I'm just saying that once you do this 1,200 crore of capex at an all India level, you would be okay to add 2,600 crores of sales.
Practically what you're saying, yes. Practically what you're saying, yes. It could be a little higher, and depending on what products we are making.
Okay, understood. That's it from me.
Yeah.
Thank you. The next question is from the line of Jenish Karia from Antique Stock Broking. Please go ahead.
Joint venture with IVL Dhanushri, as in how do we expect to benefit from it, and what is the scale of PET recycling that we are expecting? Some color on that front, sir.
I couldn't get your question. Sorry, I couldn't understand it.
So we announced a joint stake which is in with the IVL Dhanushri, correct, in May. So
your line is not clear at all. I can't understand you.
So is it better now?
Your voice is breaking, Jenish.
Sure.
Is it better?
Yeah, please.
So I was saying that recently we announced stake purchase in a joint venture with IVL Dhanushri for PET recycling. So are we expecting some benefits on PET preforms from that venture? What is the scale of opportunity, or some color on that front, sir?
Well, there are two things. One, that is the need of the hour, because we have commitments and we want to make sure that we recycle our products on our ESG platform also. At the same time, when we are going to produce our own resin out of that, so we will get benefits out of that.
Any color on what would be the size of recycling? How many PET bottles do we expect to recycle in a year or something like that?
I don't know, but the first capacity we are looking at is about 30,000 tons.
Okay, that's helpful, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Gagan Goyal from Trinity Capital. Please go ahead.
Hello. Sir, can you hear me?
Yes.
So the question might have been answered earlier, but how are we envisioning the dairy business expansion across geographies and product mix?
Well, the dairy is doing extremely well. It has done extremely well. So we are doubling our capacity next year. And as our sales keep on going up, we'll keep on adding. But at the moment, we are doubling our capacity for next year.
Sir, in terms of geographies, are we expanding with?
It will be in the western in the western region, which would service west and south.
And in terms of product mix?
No, dairy you just said. No, you asked for dairy. So dairy, I'm giving you.
Within the dairy, what product mix are we specifically?
Product mix which we have, we can't supply right now the mix we have right now. So we are just going to add that to the western and the southern region.
Okay. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you very much to all the participants for their participation, and I hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would you like to know more about the company, please feel free to contact our investor relations team. Thank you once again for your interest and support and for taking the time to join us on this call. Look forward to interact with you soon. Thank you very much.
Thank you. On behalf of Varun Beverages Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.